Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Friday, November the 3rd, 2023. It's been a while since I talked to you, and we are trucking along. I know that kind of means that you are persisting through tough times, but in this case, I also mean like trucking along. Everything is going as planned. I wouldn't say blue skies ahead, as you can see in the picture, but I have not seen any reason for concern that our bullish view is under attack. So we're trucking along, we're moving along up on the road, higher she goes. And as you know, actually since last week, we've simply been biding our time to wait for the third, fourth, and fifth wave setup to occur on different wave degrees, right? So we thought for the third wave, we get a smaller fourth wave, a smaller fifth wave, a bigger fourth wave, a bigger fifth wave, an even bigger fourth wave, and an even bigger fifth wave for this impulse up from the September lows to complete on Bitcoin. And I think it's the October lows in Ethereum. Regardless, that's what we're tracking along, and we have not invalidated that pattern at all. We've not broken below any key levels where I would go, uh-oh, this pattern, as I show you here, is falling apart. Remember, here are the four phases of Bitcoin based on its halving cycle. It's every 4 years halving cycle. In that we are now in the bullish phase. We just completed the bear market, which lasted from 2022 into 2023, pretty much from December 2021 to December 2022. And then we start the bullish phase, and we often top out somewhere in the middle, which is about June-ish. And then we go through an initial decline that either stops somewhere in September or March the following year. So it is centered around December 2024, plus or minus 3 months. And so far, we bottomed in the September timeframe, which is great. So now we should start the next bullish phase, which is the early bull market into 2024 and then the late bull market. Remember, we're looking for a target anywhere between 100,000 to almost 300,000 based on, this is of course Fibonacci extensions for 5 for 5 for 5 C3. Okay. We can use also the logarithmic growth curve, which points kind of higher, of course. End of 2025, we are looking at around 200,000. It's very possible. All depends on what wave extension the market will choose. 400%, 500%, 600%. I don't know. And based here on the 9.6% million percent increase since important lows were made in 2011. And that projects 103 to 211,000. Okay, so this is kind of what we are here. And let's reach that one. And I have no reason to believe this is going to fall apart unless we start breaking below the December low from last year. That's really for Bitcoin over history. So this is then the Elliott Wave Count. This is all the important information that we're never always right. And please excuse me when I'm wrong. And if you are always right, please let me know. Then you can take over from me. And this is then the short-term wave count for Bitcoin. Nothing new. We were tracking this 3, 4, 3, 4, 3, 4, 5 pattern. It looks like we're in gray 4. This is the ideal preferred path. And I do want to see one last gas higher for this 5 of 1. And again, if we start breaking below, I would say, let's put that on the map here at around 32,780. That is a warning that we have already topped. Okay, that is our warning sign. And then we should go here to about 30,000 for this wave 2, and then we get wave 3. We have some nice negative divergence going on here. And look how this is akin to what we had here earlier this year in January. And that was a 3, a 4. Okay, 3 and a 4. So the third of the third wave is always the strongest one. That's why you have maximum relative strength, RSI, relative strength indicator, because it's the strongest wave. As you can see here, this is where we, of course, stopped. And then the third wave is, of course, a little weaker. Then you get the fourth wave, which gets you almost oversold, right? Gets you oversold. Then you get the one last gasp higher. And that seems to be the pattern right now, I believe, I'm following. Can't be certain, but that is our blueprint we're going for, because then what we get here as well is a nice kind of MACD rollover. See this? And then you see a MACD, so the momentum here at the fifth wave is less than it was at the third wave. Same for money flow, very strong money flow almost at the third wave. And the same what we have here at the third wave. So this seems to set up still for a little bit higher, again, around 37,500 plus or minus 1,000. And then I think we should see a bigger pullback. And from there, we're going to rally into the 50,000s, okay? Potentially much, much higher. Here is the alternative in that we're not wrapping up the last four wave, but that we're going to see another sequence of 4 and 5 waves. Okay, then this little blip here I counted is not this blue 4, but it is simply part of the advance that started off this gray 2. And then 2 days down is 4, 2 days down is 2, and then we should see several days down for 4. Okay, several days down for 4, another, and 5. It targets a little bit higher in the about say 38.5 to 39,000. But you can see here we're starting to wrap up this first wave regardless. Now this is a slightly different wave count in that we completed cycle 4 here in November last year. And here I have a major 4 of a cycle 3. Okay, so that's why, of course, these wave degrees are off by 2. This is a intermediate, minor, minor. And then here we have, of course, a primary, which is 2 degrees higher, major, which is 2 degrees higher than minor, okay? A little bit potato, both will point eventually to the same upside targets. But just to exemplify how we can wave count this shorter term, is it 3, 4, 3, 4, 5 versus 3, 4, 3, 4, and done, okay? GBTC, though, argues for this 4, 5, 4, 5 setup, similar to this. Again, we topped exactly here at the lower end of this ideal wave 5 of 3 target zone. We have this nice negative divergence. So again, the strongest at the third of the third wave, and that we should now be topping out. Okay. Again, I can be off by 1 wave degree. The alternative would then simply be, let's see if I can find it for you. And I'm going to do it like this. The alternative would be, of course, this. So we're going to make a new chart, and then we say, no, that is 1, that is, and this is not 1, and this is not 2, but this is 3, and this is 4. It is allowed because there's no overlap, as you can see, right? There's no overlap. And then 3 is the longest, and this is not 3, but then this is 3, okay? And then this is 4. But as you can see, we're then starting to run a little bit out of space. But there we have it, okay? GBTC would then project something like this. Okay, so this is the alternative. I don't like it too much because I think the third of the third wave was here in October, and the fourth of the third wave was right here. This is then the third wave, okay? And as I show here, this is then the third wave, etc. So I want to see a little bit more of a rollover, but beggars can't be choosers. And of course, we'll go by price level, right? We want to go by price level. So far, so good. I like this pattern. We'll keep it as is. We really need to see a first warning. I think we can now start to, this is our first warning. This is then, of course, our second warning. That's our third warning. So, looks good. I see no reason to turn bearish on this one. Let's see if I can find a nice weekly chart that is reasonably okay. There you have it. We broke here above this critical 24 level, and I like it. This chart looks pretty bullish for me. This is Ethereum. Let's see, Ethereum holding the 200-day moving average. That's good. We have technically, as I said yesterday, enough waves in place to consider the impulse higher complete. But it is all a little bit about the interpretation of this rally. What are the first waves? Is this like 1, 2, 1, 2, 1, 2, 1, 2, and then 3, 4, 3, 4, 3, 4? I might be off by 1 or 2 wave degrees, same as for Bitcoin. So we can still easily target into the 2000 for an extended wave 1. Okay, so that's why this is a question mark, and it can easily be that we are still in this impulse with several sets of 4th and 5th waves to go before this is complete. The bearish alternative is here as shown. We completed a counter trend rally in the form of a irregular flat with B. I find this very exotic. It's possible. I find it very exotic. And we need to see at the minimum drop below 1740, warning 1. Then the second warning is below 1640. That is warning number 2. Okay, that is ultimately our price zone here at about 1520-ish. If we go below 1520, then all lights is off or out, and we're going to go to 1350. Okay, that is what I am looking for in that case. But this is not my preferred wave count at all. If we break, of course, above 1875, then I think this really becomes unlikely, with, of course, complete taking it off the map above 2025. But this is just an alternative. This is our insurance policy. It doesn't mean you have to sell everything. We haven't even broken below the lowest of levels that we should break below to start to consider this slightly a little bit more serious. But I just want to put it out there. So if it happens, we are ready. It's the same as a car insurance. You never want to use it, but you always carry it with you. It's the same. Then we're going to look here at the weekly chart from Ethereum. And as you can see here, we are now at 1823, which means we're above the 10-week moving average, the 20-week moving average, as well as the 50-week moving average. The only thing that's holding a lid on price is the 100-week moving average. It's critical because, as you can see here, once we move above it, like we did in 2020, then we have good times ahead. So I would say the glass here is 3/4 full. We break above 1937 on a weekly basis, I think we should be pretty good. Then we have ETHE. ETHE looks like it completed wave 3, should be in 4, 3, 4, and 5. So if this is the case, then we should expect about the same for, of course, the underlying Ethereum. So I like this. So I think we're topped here for this ideal wave 5, as you can see, right in the ideal target zone. Should now be in this wave 4. Let's give some target zone here. Wave 4 should, of course, not go below the previous wave 4. So somewhere here, as you can see. So this would then be our wave 4. This would be, for shorter term or swing traders, a reasonably nice low risk, high reward entry point. I said low risk, not no risk. And then, of course, we're going to look where can we expect that this wave 5. And then we should expect somewhere along these lines, assuming a simple 5-1 relationship. Okay? We'd never know. We can have extended fifth waves. We can have shorter fifth waves that we don't know. We cannot predict the future. We can only forecast based on standard Fibonacci-based impulse patterns. And that would then be wave 3, somewhere around there in the high 14s to low 15s. Okay, and then, of course, we're going to get the wave 4 pullback, the green wave 4 pullback. Okay, again, we don't know exactly where this green wave 4 is going to go because we don't even know where this green wave 3 is going to go. So we start off with this. We say, well, this wave 4 then has a target zone somewhere around here, but it should make a higher high. That is the hallmark of a bull market, right? High of a higher low. Sorry, high, low, higher high, higher low, higher high, higher low, etc. That's the hallmark of a bull market. And then we do the same here. Check the length of wave 1. We assume a standard 5-1 relationship. And then we see how far we can stretch this. Okay, so we can stretch this. So this would be 5-1. And then we can stretch it all the way up there. Okay, this was a reasonably good assessment of the waves and where we should top and bottom without actually any fib work. So now we do the fib work with it. Looks pretty good. So the first warning is, of course, below this orange wave 4. Again, we topped here for the orange wave 3 where we had to, bottom for the orange wave 4 where we had to, top for this orange wave 5 where we had to. So far, so good. Nice Fibonacci ping ball. I like it. It's a ping pong. It's really good. So then the next warning is, of course, here. Then we can go below here. All these things. All right. But looks good. We're continually following a standard impulse pattern with a 1-2 setup, 3-4, etc. So we do have some negative divergence. The third of the third wave should be about there. Could be off by 1 wave degree, but I like it. Then this would be 1, 2, and then we will have somewhere, maybe this is gray 3, this is green 3. Okay, it's possible. Then this is 1, 2, 3, 4, 5. Okay, that is the alternative. So I can save this, for example, as this. Then the alternative is as shown here. This is then 3, and then this is 4. This was already 5 here, 3. This is 4. Okay, I don't like it too much, but it's okay. It's reasonably doable. 3, and then we're gonna get somewhere a 4. Then I would say the 5 is going to go here. Okay, so this is our alternative, which is also still bullish. As long as we hold above this gray wave 4, I think we should be good to go. Now, on to the most bullish altcoin I have on my list. There are thousands of altcoins, so I cannot track them all as humanly possible. Solana is doing great and updated the wave count over the week and said we've topped here for this 3 of 3. And we should bottom here for this 4 of 3. So far, so good. That's around 37 plus or minus $2 or 36 plus or minus $2, whatever the number was. And then we should move higher once again, I believe, until unless we break, I would say, below this 32 plus or minus $2 congestion zone. Right? This is the congestion zone. We don't want to go below this. This is quite critical. Okay, if we go below this, we have to be a little bit more careful. We did reach the high 40s breakout zone, as you can see here. This hasn't changed for many, many months. And of course, we are in a very bullish setup in that we have, of course, price above the 50-day, above the 200-day, and I'll add the 20-day and Ichimoku cloud as well. And that's always very important for cryptocurrencies. They like to be above those important simple moving averages. They like to be above the Ichimoku cloud, for example, as well. So there you have it. This is a very bullish looking chart. So we have to remain very bullish above the 20, above the 50, 200. Not only that, look how they're aligned, right? So this is a bearish chart here on the left. Prices below the 20, below the 50, the 200-day, they're all declining. And then eventually the ship will right itself again and off to the races. Here we are below the cloud. Okay, here we're kind of with the cloud. We're always below the cloud and the moving averages is bearish. And once we get above it, it's bullish. Okay. No need to front run. Wait for the setup in that, okay, price breaks above it, it's holding the moving averages, and then price starts to pull these averages higher. That's a buy the dip environment. Okay, and that's what we currently see. This is still a 100% bullish chart, so we remain bullish. Moving on to the miners, Mara, yeah, what can we say about this one? I still like to see these lower lows at around $4.50 plus or minus 50 cents for this wave 5. You can't get above resistance, you can't get above the cloud, can't get above the 200-day moving average. It's just holding above the 50-day, that's about it. Okay, so I still would like to see this lower low somewhere around there. RIOT, on the other hand, is bullisher, more bullish, whatever the correct pronunciation is. So I think we completed this expanding ending diagonal for wave C of 2. Okay, we have now broken above the critical $11 level, right? Didn't break above it here, neither there, fakey. And I think we can now, and therefore, target the 12.5 level. We're moving in the cloud as well. We've been below the cloud for a while, so this starts to look a little bit better. So I think we have a nice 1-2 setup here. And if we want to be a little bit more, more bullish, no, that's not what I clicked. And this is what I clicked. We could, for example, say we have a 1-2 setup here in place. Okay, something like this. And we should now move higher. So I was starting to look for 12.5. We held finally since yesterday above 11, which was critical, also above 10. And I think so the next resistance level is 12.5. Looks good. This chart is slowly improving. Bigger picture wise, this is the monthly candle. Haven't updated this one in a while. We have our 5 waves higher, and then we have a 3-wave decline. This really looks better as 3 waves, in my humble opinion. And if we are only in a counter trend rally, we should target anywhere between about 27 and 37. As you can see here, this is clear resistance. That is the 161.8% extension. Okay. From the low here made this year, and of course, this is then 1, this is 2, and 3. So we should go to 27 to 37. That's the target zone I'm looking for. There's a lot of upside left in this one. Okay, that is about 250 to 350%. That's nothing to sniff at. So that's really all I have for this week. Again, we're tracking along quite nicely. I want us to wrap up these 4th and 5th waves, be it 1 more set of 4 and 5 versus 2 more sets of 4 and 5. I can make a case for both. Okay, 4, 5, 4, 5, or we have it already in the bag, but looks like we should still move a little bit higher. Same for Ethereum. We could have topped. Ethereum doesn't have to follow Bitcoin exactly. Could have topped. If not, we're going to keep on extending a little bit higher with the alternative that this was just a weird sucker rally or part of a larger B wave. But at the minimum, we need to break below 740 for me to even start to more seriously consider this. All right. So ETHE is tracking along quite nicely as well. We could see 1 more 4-5 setup versus, of course, 2 more sets of 4 and 5. All right. Solana looks good. Mara looks good for further downside. I remain bearish on this one unless we break above 11 and resistance. That is, RIOT, on the other hand, is starting to break above it. So this looks a little bit better. And if we can hold above the lows here made this year, then we have a nice potential from 27 to 37. Okay. That's all I have. Take care, trade safe, and I'll see you all next week.